Well, hello everybody. Welcome to our interesting call today. You may notice that I am not Shane. And this is because Shane is very busy recording a great new webinar that's going to come out for anybody interested in trading options. And so while Shane's doing all his good stuff, I am Olga. I'm part of the Rogue Trader team, and I usually sit behind the scenes, but we thought that we'd up our content production and talk about something aside from just trading, a little bit about the background of what the Rogue Traders believe in, a little bit about what they've done. And today we're here with Richard, who you will all know. Richard, we have to stop meeting like this. Should be in the same room a little bit more often, shouldn't we?
Yeah,
Um, so something interesting has changed in you lately. And that is interesting because you have worked for crypto exchanges, a crypto wealth management firm. You advise lots of people working in crypto companies all the time while being a complete skeptic of crypto, of being a skeptic of Bitcoin lasting, ever going anywhere higher than it was. Ethereum, all the altcoins out there, but recently you have changed your mind. So why don't you talk us through what's actually happened to make that leap of faith?
sure. Um, okay, so first of all, the skepticism. So to me, cryptocurrencies have always just been more stuff to trade that didn't really have any um, v- value backing them, if you see what I mean. So, and the sort of traditional investment theory, I say traditional, under investment theory, the price of an asset is equal to the sum of its cash flows over its life, discounted by the essentially the forward rate, or the rate of inflation. So if you know how much money a institution is going to print or a stock's going to print over time, you can make assumptions about interest rates, and you can come to a reasonable view as to what the value of that stock is. And the same with a bond and so on. Cryptocurrencies that produce cash flows tend to produce cash flows in cryptocurrencies. So they, in their very nature, they produce cash flows into something I can't spend, or up until now, ignoring the fact that there is an exchange market between, you know, for example, Cardano and USDT, and I can convert USDT to US dollars. Um, but I've always felt that that value proposition was always arbitrary. It was just a number chosen out of a hat. Um, and specifically, I always felt the same way about Bitcoin. But it never occurred to me that Bitcoin could be thought of as actual money. Um, I, you know, you could. I was thinking a bit more in terms of play money, but I was aware of the impending decisions around the approval of Bitcoin ETFs by the SEC, and saw it happen, traded through it, made money through that. Correctly assumed that there wasn't going to be a big blast up in price as a result. The run up had all been front run. This is the nature of markets. But then I started taking notice of the inflows into the Bitcoin ETFs, um, and it occurred to me that this thing will probably become money simply because so much inertia is behind it. Kind of in the same way that we all agree a Picasso is exchangeable for high values of quantities of money. It's a security because so much money has been invested in the Picasso by so many people that enough people, and there's an industry behind it, enough to believe. And so I don't foresee Bitcoin becoming money, but I do foresee it becoming an extremely convenient store of value. Now, different people will have different views on how much value, how much of the global value will get stored in Bitcoin. You talk to Michael Saylor, and he'll give you the number of upside 400 trillion. Talk to me, and you'll get the figure of zero, right? But somewhere in that between the two is what will come out of price discovery. And we're in price discovery phase at the moment, all over again, because the world has changed. Now that there are 11 ETFs that can legally accept Bitcoin or buy Bitcoin on behalf of retail investors in the US, CFAs and funds can make allocations to these ETFs, and surely they will, because as the price goes up, people will want to be in. So super skeptics will say, yes, a load of retail money will go in, and then this bubble will pop, and this thing will go to zero. And then the people who are believers say, actually, money will flow in, and people will realize that this is a better store of value even than gold or property, because of the reasons of, easy to transport and so on, and not relying on any other infrastructure, etc. and I believe I believe that's more than possible. I believe that I now realize that Bitcoin is probably here to stay. I don't know whether the long-term correct price for Bitcoin is $1 million a coin, $10 million a coin, or $10,000 a coin, or $1 a coin. Right? That all depends on how much of the global wealth, by consensus, humanity chooses to store in this asset class. But shall we say, for the next decade, it seems to me that likely that it will be more than now. Previously, prior to the ETFs, Bitcoin was available to enthusiasts and people who were determined to find a store of value that wasn't, shall we say, government sanctioned. Well, now Bitcoin has become essentially government sanctioned. So the argument therefore presents itself: if you are a Ukrainian businessman seeking to protect your wealth because the front line's moving closer to you, do you buy property in London that you're never going to live in, that you're going to have to maintain, and you've got friction getting rid of it and so on? Do you buy a bunch of gold bars that you've got to store in a vault, prove KYC, etc.? Do you buy a home in Monaco, a factory unit in Nevada, or do you just go and buy some Bitcoin on the basis that you can always offload the Bitcoin and receive any other currency later? Now, you can do that already with gold bars, and I'm a great proponent of gold bars, and I strongly believe in investing in physical bullion for all kinds of reasons to do with inflationary monetary policies and so on, and debt. And I think personally that long term gold is still a better store of value than Bitcoin because it relies on less technology, in a sense. There's a trade-off between the tech required and the infrastructure required. But I think that there's a price discovery process in place, which is very likely to see the price of Bitcoin rise well above where it is today, simply because of the weight of capital that will flow into the asset. I think that will be a volatile journey. So you'll see numbers published of Bitcoin's going to get to $150,000 by the end of the year, or $250,000 or $500,000, or it's going to be $1 million a coin in 4 years, or whatever. Maybe. I'm no longer laughing at those numbers, but I am sure that line will not be straight. There'll be lots of people made poor on the way, and it'll be a volatile market. But somewhere at the end of all of this, there will be a stable value for this coin that will represent the amount of global capital that people are willing to store in this asset class that just happens to exist through proof of work. It's underpinned by the amount of energy it requires to keep the network running and the amount of energy that's already been sunk into it. And I found that strange to begin with, but I no longer do, because I was, again, to compare with gold. Why is gold valuable? Um, Gold is valuable because it's hard to get, um, and it's it's recognizable, and it's pretty, and it's good for gifts and decorations and so on. But that's not really the point. It's hard to get, and so even if a massive new gold deposit was discovered, gold wouldn't go down in value simply because you've still got to get the gold out of the ground and refine it and store it and do all the paraphernalia to it, and there's someone has to pay for that. So it's still, so if that's expensive to do, it's still cheaper to go and buy gold that you can already get from someone else's vault, or on an exchange. So the stuff still has value. And I think for now, Bitcoin is falling into that category. It's hard to get. Um, Now there have been many other things in the past that have been hard to get and have gone up in price. Peppercorns were one of them, and cowrie shells were another in England, and even pineapples. There was a pineapple bubble. Um, and of course there was the tulip bubble in Amsterdam. Uh, so even so, cowrie shells. By the way, these are these sort of pleasantly shaped shells that people polish up, and they're still a couple $100 each to buy, or maybe $1,000 to buy. Right? They're not worthless. So the bubble happened. The price didn't go to zero. They still have value. The price of tulips still is not zero. Pineapples still have a value. Peppercorns still have a value. Um, and so it's entirely logical to me that Bitcoin will continue to have a value after the bubble. So it's logical to me, first of all, that there's going to be a bubble. Secondly, that there will be a price hunting, and eventually there'll be some sort of stability in the price. Now, and if you want me to pause just to tell me, but that brings me on to what affects that price. And of course, Bitcoin is an infinite duration, zero coupon asset, which makes it incredibly sensitive under sort of investment theory. It makes it almost infinitely sensitive to fluctuations in inflation and interest rates. Really, and in sort of in investment theory, you could argue that Bitcoin's value should be zero because it generates zero cash flows, even though it costs nothing to own. But the value of an asset is the sum of its future cash flows, and therefore the future cash flows of Bitcoin are zero. But there's one thing that they didn't take into account in the classes I attended many years ago, which is that some assets have a finite quantity, which Bitcoin does. In fact, it's the only asset I can think of, other than individual tower blocks in downtown New York City. That where there's only a certain number of them, and it's the most easily transported asset known to humanity. Now, this is all very troubling for me because I'm old, and this is a very new asset, and it's very difficult for a human brain to imagine that the world has just changed. History's been made while they were alive, right? But I think there's a possibility that it did. There's a possibility that something, and it may be that in 20 years' time, it isn't Bitcoins that will be used as store of value. It'll be some evolution of Bitcoin, because there's all kinds of ways to destroy new currencies and new asset classes. Um, but the concept has been unleashed in the mind of humanity. Everybody I have spoken to who holds Bitcoin, who holds it in their own cold wallet, absolutely, they are absolutely committed to owning wealth that governments cannot interfere with, that central banks can't interfere with. And I think it's the creation of the ETFs. Of course, has brought Bitcoin into the sphere of the central bankers and the Wall Street pundits, because it's now, the price is now going to get more and more controlled by those people as they own more of it. ETFs open all kinds of possibilities for government confiscation, and let's not forget that in 1935, Americans had their gold, physical gold, confiscated under threat of fines and imprisonment. Clearly, sometimes governments fear people having control over their own financial destiny because it threatens the hegemony of the national currency, and there are all kinds of security implications for that. I can well imagine a scenario where the total value stored in Bitcoin becomes X trillion dollars, starts to represent a significant chunk of available M2, and people start refusing to use money, or refusing to accept money, or refusing to save money in government bonds, for example, because they will rightly come to the conclusion that the interest rate they pay does not compensate them for the increase in money supply and the inflation. So they'll realize that they are losing money by buying bonds, and they will see Bitcoin on its journey of price discovery and the relentless move up in price over, say, half a decade, and they will therefore conclude that I'm clearly better off investing in Bitcoin than I am in bonds. And actually, you might find that the rate of growth, the rate of price increase in Bitcoin exceeds that of the returns from stocks. And so you would then have a scenario where people were selling stock to buy Bitcoin ETFs. And I think this, if allowed to to happen in an uncontrolled way, you might then introduce cryptocurrency market levels of volatility into the financial markets of established nations, aka the USA, the banker and protector and policeman of the entire world. You'd suddenly find degenerate levels of of risk taking and price fluctuations in financial markets, which would essentially, well, I think the current levels of leverage would very likely cause central clearinghouse defaults, and I mean, the outcome of that could be anywhere from bank runs to disbelief in fiat currency to the utter collapse of the money system and therefore society, and the revolution and the re-emergence of the government. I think it's actually it's the exact thing that all governments live in permanent fear of. Therefore, at some stage, I would expect there to be some effort to manage the price of Bitcoin in the same way that the price of gold is managed. And there are a lot of conspiracy theorists about, gold's price is artificially held down by short selling in offshore vehicles and whatever. Well, and it's actually not a secret. The LBMA and the sanctioned banks surround it do have a mandate to manage, in quotes, manage the price, i.e., prevent it from rising too rapidly, prevent it from falling too rapidly. They act as a buffer. I could well imagine something like that, some attempt to put something like that put in place. The issue with Bitcoin is that we've seen in cryptocurrency markets, the internet allows mental genes, memes, to travel within a space of every corner of the earth within a space of a day. Even I, at the age of 55, receive the memes created by teenagers and understand them within 36 hours of them being created. So imagine a scenario where the word gets out that no one trusts the US dollar anymore, and I'm being extreme deliberately, and everyone says, screw it, sell my dollars and my stock and all my spare properties and everything for Bitcoin, all on the same day. It's the end of the world, right? Every institution's bust, every bank's bust, everyone's on default, interest rates are infinite, and what you'd then find is that clearinghouses actually have the right to seize assets, and so you'd get loads of assets being seized, and it's the kind of thing that causes not just a revolution, but this. I mean, we're now talking about a global revolution. I mean, everyone angry. It's just an astonishing thought. Um, and I'm not saying for a moment that this will happen, but never before have we seen the possibility of this happening. And right now, I see that this tool, the admission of Bitcoin the into the financial system, has opened this up. And the reason is, why Bitcoin? Why not gold? Because 8 billion people can't suddenly decide to go and buy gold ingots, right? It's hard. You've got to go through KYC. You've got to get an account with it. You've got to store it somewhere and not get killed carrying it home, and all that stuff. Bitcoin, it's easy. You just sign up on a exchange and you buy some Bitcoin and then put it off the exchange into your wallet. Could literally happen overnight with everyone on Earth doing it. And then it's the end of the world as we know it. It's well, if you're a government, it's the end of the world as we know it, because your financial system that supports you has vanished, and the financial system that supports global stability has vanished. Suddenly, everyone's a survivalist. They've got their own internal bank in their own password. Some people will then be recognized as being rich because they've got more bitcoins than other people, so they become targets for having their children kidnapped and tortured and killed for their bitcoin. I mean, it's the kind of thing that could drive whole sections of the world to insanity.
So, well, we've just been talking about Bitcoin. There's now the idea that the Ethereum ETF is
Mm.
on the way. What about all the other blockchains that say that they're faster, they're cheaper? Are they just completely different? Is it just Bitcoin that is going to get the status in our world, or do you think that there's more to come?
I think Bitcoin is unique because, first of all, of its limited supply, um, and secondly, it's first. It's the one in everyone's mind. It's the one we all recognize. Um, so just before I answer your question, I'll answer one of my skepticism questions, which is, why isn't there a Bitcoin 2? Why isn't there another Bitcoin that has a different initial hash and a different private key for the first block that we all use in parallel? And it may be that if Bitcoin gets to, say, $1 million a coin, um, or $10 million a coin, that actually there's a great incentive to push and to even adopt a second blockchain, because concentrations of money and divisibility and so on. And of course, where does that stop? It's a brave new world. Um, with respect to the other cryptocurrencies, Ethereum is probably the most, if you like, serious, most of them, because it's the most established, and it tends to be the blockchain on which all other blockchains are layer twos are built, more or less, other than Solana, but on the whole. Um, I think you have to think of Ethereum and these other blockchains as differently to the way you think about Bitcoin. Bitcoin's advantage and disadvantage is that it's a one-trick pony. It simply stores value and it does nothing else. It is a smart contract system, but there's only one smart contract in it, which is, I'm worth this much, and transfer money. Ethereum is actually a distributed computer. You can think of it actually as a company, a corporation, owned by everyone who has Ethereum, and it pays out in its own company store tokens that just happen to have some value by consensus that is vaguely related to the cost of maintaining the network. Ultimately, the value of that will depend on, in terms of dollars, will depend on how much you can connect the workings of the Ethereum corporation with the workings of corporations that value dollars. Um, and I don't know what that number is. I think my problem with smart contracts is that they don't solve a new problem. They solve an existing problem quicker, maybe, in that they offer you the ability to exchange contracts, agreements, and to transact, notional value. um, but I can do that on existing Visa networks, and I can enter into contracts with people by writing on paper and I suppose signing. Um, and in the country I live in, Andorra, a contract doesn't really have value unless it's also witnessed and signed by a notary. So, what is the value of a smart contract stored electronically, blockchain or not, publicly visible or not, provable or not, if a notary hasn't signed it also? I don't know. So it seems to me that there's definitely a future for smart contracts for sure. Whether it's a future, I think, but I see it more as a technological future that changes the way we store records um, or complements the way we store records, perhaps, and exchange value. But I don't see it as a massively destabilizing force that governments would be wise to be wary of. I think it's I think that's I, because it requires connection with the real world, with the rest of the financial world, whereas Bitcoin doesn't. Bitcoin is simply you saying, "Screw it, I'm going to put all my money into this Picasso, roll it up, stick it in my backpack, and I'm going to wander off into the wilderness, and that's my money. And if I ever want to come back or go and live in China or Timbuktu, I'll just go there and exchange it for the local currency and start my life again." It's ultimate power, personal power, about where you live and um, what you do next, and whether you can take this crap anymore from the government who wants to charge you half your money in tax. You can just say no. You can't do that with Ethereum because it depends. Ethereum's job is to create a business network. It's a corporation. That's what I think, and I think the other things that the layer twos that live off Ethereum are all just part of that, making that more efficient.
Got it. Okay. Well, look, let's mostly wrap it up there. Let's keep these interviews um, quite bite-sized, but I think this is a lot to think about. And just confirm, so your play on this is using options to actually accumulate more Bitcoin now instead of taking a non-direction view as you were before.
Yeah, I've been trading for the past. Well, I've been doing all kinds of analysis of Bitcoin options markets over the past 5 years, and I've been trading for the past year in a non-directional view, and that was working well in a market that had no direction. I think I think that's all changed. I was caught a little bit off guard by the initial rally up in Bitcoin, and I'm rejigging all my positions to essentially point up. I'm still trading vol. Um, so actually, the way I'm moving my books is that I treat um, options on Bitcoin as a way to act like a miner, but without having to go and buy any mining kit. Um, I'm not looking at the dollar value. I'm not hedging the dollar value anymore. I'm just hedging the Bitcoin value.
Okay, great. Good. Well, look, let's wrap it up there. Let's see what people think, and maybe we can come up with a few more little questions that we discuss from with you and with Shane from time to time.
Great, thank you.
Okay, good. Well, take care. See you soon.